Tuesday's rate cut by the US Federal Reserve didn't do the dollar any favors, but then it wasn't really meant to. The dollar, anyway, has slipped to a 13-year low against the Japanese yen. That piles more hurt on Japan's exporters. Well, the greenback is digging deeper into a two-month low against the euro, and it's even bowing down to the weak British pound. How must that feel? Well, US interest rates, of course, since Tuesday, now stand pretty close to zero. That makes the dollar the lowest yielding currency in the industrialized world. I spoke earlier to Keith Miller, currency strategist at Corporate FX. I asked him whether he thinks the dollar's descent was inevitable, given this extraordinary US rate cut.
I think it was. The markets had priced in a cut, however. They had only priced in a 50 basis point cut. The Fed took all markets by surprise, and I think even some of their own members by doing what they've done and practically zero. And it was unexpected, and we are seeing this weakness in the dollar as a result.
Is that going to be pervasive, persistent weakness in the dollar?
That's the key question. There will be persistent weakness in the dollar, but let's not forget that it's the weakness in all of the other economies and currencies that is all relative to the dollar.
Okay, so are we going to see, for example, weakness with the euro or with regard to the dollar, or is it going to go the other way? Who's going to be weaker now?
It is. Again, it really is a battle of weaknesses. We've got to also look at the Japanese yen. Now, the US dollar is always seen as a safe haven in these kind of environments, and the Japanese yen is as well. And it seems as if there's a shift, and now people are starting to view the euro, because they appear to be in a more stable position than the United States, as a safe haven. So the moves that we're seeing back on the euro versus the dollar, back up towards now 143. If we see 146, then we're back up towards 150.
Okay, but in terms of the euro, presumably the ECB is going to have to start cutting even more. Essentially, it's behind the curve, certainly if you look at either the Fed or the Bank of England. Once the ECB starts cutting, presumably that is going to start damaging the euro, isn't it?
It will. I think the key statement at the moment is if the ECB cut. Although, in my opinion, I think they are going to cut on January the 8th. There is speculation that Jean-Claude Trichet is now saying that they do not want to see lower interest rates in the Eurozone. And if he's firm on that and he stands by that, the interest rates in the ECB, in the Eurozone, will stay where they are.
Well, let's come back to, okay, we've talked about the weaknesses, if you like, but let's talk about the strength. You mentioned the yen there. I mean, clearly the yen is golden. That's doing very well up against all of the other currencies, along with the Swiss franc. Yeah. But are those safe haven currencies going to be so much of a safe haven in 2009? Or could we see the dollar, the euro, maybe even the pound come back a bit against the yen?
The yen, I think, is going to continue to gain strength. If we look at its position against the dollar, we're at around about 87. We have not been here since 1995. And even if you go historically back from there, it's a very long way you have to go back. Even through the 80s and 70s, we weren't at these levels. Let's remember that the Japanese economy went through their major banking crisis in the 90s. They recovered extremely well. And they've come out the other end relatively strong. And fundamentally, they are looking a lot safer than the US. The US have got huge debt, as we have in the UK, as the Eurozone have. And I think the yen will continue to strengthen against the basket of these currencies.
Keith Miller there of Corporate FX.